I'm Charlotte McLeod with investingnews.com, and here today with me is Randy Smallwood, President and CEO of Wheaton Precious Metals. Thank you so much for being here. Great to have you.
Charlotte, always a pleasure. Thank you.
Yes, really good to have you back again. There's lots to go over, and really what a perfect time to have you on with gold right at that 3,000 level this morning. So I thought maybe we start with that because it's probably top of mind for everyone. What key gold price drivers are you watching right now?
Well, we're still seeing strong central bank demand, and I really think that people have to understand what is driving that. And it's a bit of nervousness about the U.S. dollar and how strong it is relative to other currencies, and the fundamentals just don't add up. And so what we've seen for quite a while now, for several years now, central banks just transferring out from U.S. dollars to gold, and that's the driving force behind this. But what I will say is that we are starting to see a much stronger appetite in the institutional and the retail space in the West. Just a number of conferences I've had over the last couple of weeks, we're averaging 30 to 40% new faces, new companies, new fund managers that are coming in wanting to learn about gold, and wanting to learn about precious metals, and as a good place to invest, wanting to learn about Wheaton. And so that's probably one of the highest ratios we've ever had with respect to that new space. So I do see increased demand coming from, as I would say, Western institutional and retail investors.
Yeah, that was one of the points that I wanted to ask you about, actually, because when the gold price is moving like this, I think the first place that people often go is to the royalty and streaming companies. So anything more you can say about, I guess, the education efforts that you are maybe having to make in that regard and the people that you're talking to?
Yeah, it's the business model, and the strong advantage, obviously, as the creator of the streaming business model. We prefer streams. We think they do a better job at delivering value to all the stakeholders, including the operators and of course, our shareholders. The benefits from an investing perspective, especially for a generalist or new investors into the precious metal space, is the risk mitigation that we have within our business model compared to a traditional mining investment. Our costs are fixed. Our capital costs are fixed. Our operating costs are defined in the contract and fixed. And so, that confidence allows us to avoid inflationary pressures that we see so many other companies, so many other operators having to deal with, having to manage, having to work their way through. We don't have that exposure. So truly, when we see gold moving up in value, when we see silver moving up in value, we deliver that benefit to our shareholders. And again, the huge advantage of streaming over royalties is that we deliver it with a levered exposure, in the sense that we do make a production payment on a per ounce basis as that metal is delivered to us. So that gives us increased performance relative to the price of gold or the price of silver. And so the model is just so strong from a risk mitigation perspective. It's an excellent way for people that are new to the space to step into the space and as I said, dip their toes in. And I think, a company like Wheaton should be a foundation investment for everyone. And then they should probably have some higher risk, higher levered, higher exposed investments over and above that. But Wheaton should be the foundation investment. That's where we really try and shape ourselves that way.
Yeah, I think you do a really good job of explaining how the model really insulates the company from a lot of the risks that mining companies face. I do want to talk a little bit about those risks because I know that you are out there talking to companies, and there's a lot of turmoil going on right now that can impact company costs, supply chains. What are the key things that these companies in the mining space are dealing with right now?
Well, I think it really comes down to the fact that higher commodity prices tend to, there's always going to be pressure on costs. And so it's tough for mining companies to manage those costs. And then, what happens is when the price of gold goes up, low-grade material that might not have been economic in times past, all of a sudden does become economic. Now, the challenge is that as soon as you start processing lower-grade material, your costs will go up on a per-ounce basis. It's simple math. And so, the challenge in the mining space is trying to find that balance, trying to recognizing that now you've got a lot of lower grade material that may be profitable to process, but it doesn't generate as much profit. And because you're limited in terms of throughput capacity, anything that's lower grade going through will push up the costs. And so the challenge again on the operating side is trying to find that balance, maintaining strong profitability, but you also don't want to go through, you don't want to waste any of the resource. Mines are getting tougher and tougher to find. we need, as a responsible industry, we need to maximize the benefit that we deliver out of our operations. Maximizing that kind of productivity is part of how we minimize a broader impact in the industry. And so it's something that the industry has to focus on. And finding that balance is a real challenge.
Okay, yeah, really, really good to go over that as well. And going back to what's going on with the gold price right now, I know that you've been bullish on gold. Many people have been bullish on gold for a long time, but it does seem to have moved faster than many people anticipated. So curious to know your thoughts on whether gold needs to take a little bit of a breather right now. What do you think?
$3,000 is just a number. It truly is just a number, but there's no doubt that it does carry some significance. What I would expect to see is that we have been sort of bouncing off of 3,000, staying in the $2,900 range. We're as of right now, we're a little bit below 3,000 again, but we did break through it earlier this morning. And so, I do think it's going to build up a firmer platform, but what we've seen is gold over the last couple of years has just been building up a more and more solid base. And the fundamentals that are driving it are ones that aren't going away. Increasing debt levels, concerns. I've long described gold as a comfort metal. It's where people go to in times of distress, times of challenge, times of trade wars and geopolitical wars and conflicts, outright wars. Gold is always going to have an appeal in those kind of environments. And we still see quite a bit of that around the world, if not even more, especially on the trade war side. The deglobalization push that we're seeing around the world bodes well for gold. Gold is one commodity that is immensely respected in every culture around the world, and that value is true and recognized. And so, again, I don't see any fundamentals that show to weakness in gold. All I see is continued strength. And I think if you look at some of the forecasts that we're now seeing out of the major banks, they're all continuing to push for, their forecasting is higher gold prices. And it's tough not to be excited.
It is. I know nobody likes to get too excited in case we jinx it, but I agree on that note. And I like the idea of gold as a comfort metal instead of, sometimes you hear about it more as a crisis metal. I like your phrasing. Okay. So we have gold looking pretty good, pretty solid. And I do want to bring up what's going on with the gold stocks, because of course we know that some gold companies have seen good share price moves, but investors, I know we get a lot of questions about this, are still waiting for maybe that more broad-based move in the gold stocks. So any thoughts on what we're seeing there and what might be coming?
Well, we have to deliver. The mining industry as a whole has had some challenges in the past in terms of delivering on its promises, and so I think what really needs to happen, and you'll see that just as we just released our year-end results and record cash flows, record earnings, all the way across the board. We need to deliver this back to the investors, and that's what's going to wake them up. And bring back even more investors. We are starting to see some strength, definitely for the higher quality companies, the larger ones, but not even larger, the higher quality ones, the ones that operate at higher margins and have a consistent track record of delivering value. We are starting to see a pickup in value. We've been hitting record share price highs now for several months at Wheaton. And, continued strength. Our results are supporting that. We had an incredible fourth quarter. And so it's a matter of delivering on our promises and making sure that we do that. When we see gold prices shoot up like that, there should be strong cash flows. And we are seeing that from even other companies in the space. And so just deliver on our promises.
Yeah, I think I've been hearing that, from a number of people. So we've got to see the results and then the moves will follow. And we'll definitely get into Wheaton's latest results. Before we go there, though, I want to ask you at least briefly about what's going on with silver. So we've got gold at all-time highs. Silver is moving, but again, not as much as investors might hope. And when we talked last time, you're mentioning we need to probably see some Western retail interest in silver before we see it really move. So any updated thoughts you would share?
Yeah, I would say we still haven't seen a lot of that yet. But the fundamentals are strong, if not even stronger. I will say that we've had more questions about our silver production, and we do produce, over 30% of our revenue comes from silver. So we're actually one of the biggest silver plays in the space, and by far one of the most profitable silver plays in the place, because our cost per ounce is down around that $4.50 an ounce. And so it looks pretty attractive with today's spot prices. And so the interest level, we've been seeing a lot more questions about our silver production and about silver optionality in terms of what we have in new projects coming on stream. And with the growth profile that we've got, it's such a strong aspect of it. So we are starting to see, I think, a bit more interest in silver. The fundamentals are sure there. If you want to talk about a critical mineral, the more silver that is consumed, the better we are on society, in society in terms of efficiencies, productivities, antibacterial health applications, all sorts of. Silver just has so many applications, and it's an affordable precious metal. I just think silver's time is yet to come. I tend to believe. Silver's got a track record of outperforming gold. It's just it's definitely got a higher beta, a higher volatility, and it just tends to lag gold. And so we will see that time. There's definitely a pickup in interest since the last time you and I talked, just by virtue of the number of our investors, both existing and future, that have been asking about our silver production. And so we remain hopeful and making sure that we have good quality assets that deliver that silver to us.
Very interesting. I always love to hear what kinds of questions you're getting from your investors. So that's a pretty good bellwether, I think, for what's going on with silver. So let's move over to talking about the company's latest results. So you mentioned some of the financial highlights. If there's anything else you would pull out, we can talk about that. And also we have guidance for 2025, but what really stood out for me as interesting was that longer term guidance to 2029, where you're looking for, I think, a 40% increase in production. So it'd be great to go over that and where that's going to be coming from.
Well, it's, the growth profile is probably one of the strongest in the entire precious metal space. We're not talking streaming and royalties. We're talking even amongst the mining companies, and especially from such a diversified portfolio of assets delivering this growth. Salobo, of course, our fourth quarter record gold production from Salobo, more gold than we've ever seen from Salobo, and having it as a flagship mine in our company has really proven to be, giving us a treasure chest in terms of gold production, and the asset just continues to improve. Our 2024 production was actually very strong. I would say that, the 2025 production, we've got a bit of growth. We've got some, on a guidance basis, it's about a 10% bump. Most of that is going to come from, we've got 4 new mines that will be delivering metal to us by the end of this year. They're very close. In fact, Artemis at Blackwater has already poured their first gold and silver. And we've got a number of assets that are very close to that. And then we've got altogether 9 new mines that will be delivering production by 2029, feeding into our portfolio. And so really exciting times. A lot of the investments that we've made over the last, 5-6 years in development projects is really starting to pay off. And what I find particularly exciting about the growth is that, it's 40% by 2029, but we've got growth beyond that. Our average production by 2030, between 2030 and 2034, is 950,000 gold equivalent ounces. That's well over 60% growth over the next 6-7 years that we're seeing. I think right now we modeled 2031 as sort of being a peak year in there where we actually touch over 1 million gold equivalent ounces. This is a space that no streaming and royalty company has ever been. We are truly sort of separating ourselves from the rest of the peer group in terms of our capacity, our volumes, our margins, our cash flows, and I can't think of a better time to have this growth than in a rising gold market and a rising precious metals market. We do see strength also in our silver, and so it's incredibly exciting times, and I really think that this quarter and this year end is going to be followed by, again, record. Hopefully for what I would see the next 5 or 6 years. We're well on track. And as I said, a bunch of that growth is coming from organic assets, stuff that's already producing in terms of organic growth, but we've got a whole slew of new mines coming in to also broaden that portfolio, broaden the add to the diversity of the entire mix feeding into this production. But very exciting times.
Yeah, I always appreciate that much longer term outlook. I think that helps people really grasp what's going on. And again, going back to our previous conversation, you had mentioned you were active on the deal front, and at the time you couldn't quite say what was going on. But there's been a couple of deals since then with, I believe, Montage Gold and Allied Gold. So wanted to ask you about those ones briefly, and are you still on the hunt looking to make deals?
Yeah, I mean, our biggest challenge is we have such strong cash flows. My preference, and I think what shareholders invest into us, is to look for new projects to put that money back to work. Well, I'm not really a strong believer in cash. I'd much rather have it related to gold ounces in the ground that are coming into production over the next while. And so we're constantly on the shape for that. 2024 was an incredibly, specifically the fourth quarter, we closed two transactions, Montage with the Koné project in Cote d'Ivoire and Allied Gold with the Kurmuk project in Ethiopia, both strong, high margin assets. The Koné project's really exciting, mainly because such a strong team behind, well, actually both of those assets have very strong teams behind them. But Koné was one where we supplied the bulk of the project financing, and the company doesn't have any project debt. To get this mine built and up and running, it's coming from ourselves and Zijin, one of the other equity holders in Montage, is also supplying a bit of the capital. And so, it's a unique in my eyes, a very exciting path forward for development companies where you can work with a streaming company like Wheaton to actually fund these projects right through to production without having to deal with the banks, without having to deal with the owners. And when you're a single asset development company, debt is incredibly expensive and incredibly penalty rich in terms of how much more expensive it can get if you're a little bit late. Streaming companies, Wheaton, we have a long history of being flexible, of having that flexibility to help our partners be successful. And, I would highlight the example where we just earlier this quarter modified our stream to add a bit more capital to Artemis at the Blackwater project to take the pressure off as they're building that mine and bringing Blackwater into full production. We are focused on helping our partners be successful much more than any of the banks or the heavy private equity groups that come down with the debt side. So Montage is in a great position of having a very supportive partner fund that construction going forward. And the interest level that we've seen from other single asset developers is very high. So I predict more opportunities like that in our near-term future.
Yeah, I think it's really important to highlight your role in financing in an industry where we're always hearing about how difficult it is for these companies to get money. So thanks for going into that one. Before I let you go, I want to check in on the company's Future of Mining Challenge. So last time we had talked, this was just being launched, and now we have a winner. So I wondered if there are any highlights you want to share from that process or about the winner of the competition.
Well, Rethink Milling was the initial winner for us. We had a lot of good candidates, and so congratulations to everyone. I mean, we have to select one winner in the end. It was a tough choice. We had narrowed it down to 5. It was a tough choice amongst the final 5. But Rethink Milling is kind of this concept that they've got. They've got a couple of different technologies that they're applying that dramatically improve the productivity and reduce the costs of comminution, of milling material and breaking it down into the dust so you can get access to the minerals and pull it out. And if you can drop those costs by 30 to 40%, which is some of what the early test work has shown, an incredible benefit to the mining industry as a whole. And it just, again, allows us to produce more with less footprint, which should be an overlying objective on all of our decisions. And so, Rethink Milling, for us to be able to help them move this forward, we've got a lot of partners, but it's not even restricted to partners. We want to help them move forward and try and bring this technology to fruition and help improve the overall mining industry. So very happy with the whole event. It's an annual event. Stay tuned. We're not far off of announcing what the 2026 award's going to be focused on. So very pleased with the results here.
Okay, very good. That was going to be my question, is if it's going to be repeated. So we'll stay tuned for the next one. That's great to hear. I'll let you go for now, unless you had any final thoughts that you would leave investors with.
We've got a very golden future in front of us right now, and so many aspects. The growth that we have, combined with the precious metal price trends, commodity price trends, has setting up Wheaton to go to a space that no company of our like has ever been in. So it's incredibly exciting times.
Perfect note to end on a golden future. Thank you so much for coming on to talk about what's going on in the market and the company.
Thank you. Always a pleasure.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Randy Smallwood with Wheaton Precious Metals.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.